Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Each and every week, I leave my lines on the chart from last week's report so you can see how the forecast worked out. And right here, as I magnify this, you can see that I drew this diagonal line in an upward direction with the end of the line being my target at 353.36. I also drew this horizontal line to highlight the resistance area that we had reached back here on the 18th of August. And what happened? Well, we hit that target actually on Wednesday perfectly with that spinning top right there. Yesterday, on the 26th of August, we closed the market with a bearish engulfing candle. And the market did a little bit of a head fake today as Federal Reserve Chairman Powell kicked the can down the road again, doing his best to avoid taking action. Now, whether you believe the markets are going to go up or down from this particular point, I continue to pound the table on risk management because I think each and every person out there is at least feeling something is just not right. Again, the markets continue to move up. But I think a lot of investors are looking back and saying, this just doesn't feel right. Afghanistan is a mess. China is moving in. Shipping lanes are closed. Their supply chain is beginning to shut down. Food sources, even in Hawaii, are starting to become more depleted. And that's a serious situation there where supply ships are having a hard time getting into the ports in those islands. Well, again, the diamonds closed higher today after that bearish engulfing. And what I'm going to say for next week is that we're probably early on in the week going to test this high. Now, keep in mind, my long-term outlook for the markets is much lower. And with that, I continue to look for opportunities on the way down, whether it be bearish positions in the options markets or contrarian funds like RWM or inversely related ETFs to the market. We look at those. You could trade the VIX. You can trade puts on SPY, whatever you like. But I think that it's a good idea to position and balance your position. Now, we have not yet switched to a all bearish or negative delta position for our option traders because the trigger point has not yet been reached. But looking at the Dow right here, you see there's still an open gap down here. Just going to highlight the open gaps. And that will most likely continue to move on as a support level. Once that level is broken on the diamonds, then you could very well see a roll reversal from that point. And again, I'm keeping these lines in more as a risk management support level than anything else. So for next week, Monday and Tuesday, I think we could go a little bit higher. But notice right here, and I'm going to draw another horizontal line midpoint in this trading channel, that is still an open gap. And I think by the end of next week, we could very well go right back down to fill that gap. So ultimately, again, Monday and Tuesday up maybe around 355 and then closing the week down around 351.42. So I'm leaving that in place right there. Speaking of the VIX, ticker symbol VIX, this is the CBOE Market Volatility Index. Again, go back and listen to the recording. I will leave a link to last week's market report so it make it a little bit easier for you to go back and review the notes and look at the signals that we were discussing. I said that we would most likely drop on the VIX Monday, Tuesday, and Wednesday. We did that exactly right here, Monday, Tuesday, Wednesday. Thought for sure we would fill the gap, but guess what? We came close, but I think it will fill next week. Remember, if the VIX, for the most part, is inversely related to the S&P, and I'm being a little bit more bullish short-term early on next week, Monday and Tuesday for the diamonds, I'm going to be the same way for the S&P. Therefore, Monday and Tuesday, I think the VIX is going to go down and fill that gap, and then we could very well start to see this bounce. Again, this long-term target up here, right around 27.31, is still in place. I'm keeping that intact, not moving that line till we hit that target. But a week ago from last Friday, I should say, I put a high probability that we would rally in the VIX on this candle because at that particular point, that gap filled. And I was talking to our investors about that, saying that 100% of the time gaps fill, and then 100% of the time after they fill, prices generally reverse. Doesn't do it right away, but they usually do that within a short period of time. Well, that's exactly what happened then, and I'm going to duplicate that call and say it all over again. Once this gap fills down here, we will have a 100% chance, based on historic price movements of the VIX, we have a 100% chance that the price will reverse and start to move higher. So again, for the option traders, you could buy VIX calls at that particular point. You could buy puts in the S&P. You could trade it again short term. You could be swing trader. Long-term investors would probably stay out of that mix. They're going to continue to buy on the dips. I'm seeing more and more people talking to me about selling into the rallies. I think that's a good idea, but this is definitely a swing trading market at this particular point, as investors get a little bit more nervous as the markets press higher because of all the global events that are taking place around different parts of the world. Now, looking at SPY, because like I said, for the most part, they're inversely related. I'm leaving this long-term target right here, and here as support levels, we have a long-term gap fill target way down here. I think next week the S&P could actually go a little bit higher, just a little bit. I'm not going to call the pivot point because longer term, again, probably by the end of the year, we're going to be down in these levels based on the charts. And again, all I'm doing is looking at the SPX as my monthly indicator of what could possibly happen here with SPY, because of course they're related. Now, looking at that monthly chart, I continue to point that out to people because what's happening, we're riding this most extreme fan line right here. A breakout below that fan line means watch out below. So while I have a trigger point on IWM, I would say for the S&P 500 index, this is going to be your trigger point. Right now, it's right below that low. You can see that low being, this is the monthly chart right there. So the low being 43.67. Keep an eye on that because a close below that low is most likely going to push the S&P lower. All right, so going back to the daily chart and then switching to IWM. Again, I'm showing you my trigger points. We are basically stuck in a trading channel right here. Look at that. We have resistance up here, support down here. Came very close last week to that trigger point that I mentioned below 210. And now we have a higher volume day on a green candle. This could lead Monday and Tuesday higher, but ultimately I think we're going to go right back down. I'll even do a longer term forecast on this to fill this gap. I don't want to put too many lines on here because it tends to clog it up with too much info. So I'll erase this, but I'm keeping that trigger point right down here below 210. We start closing below 210, then my forecast is, again, I'm recording this, it's going to be right there, probably below 190, around 185 before we start to see another bounce. So leaving these lines just like that. Next week, upside target on IWM within the trading channel at 229.21. Then a pullback to fill the gap at 215, and it might take until the mid-September for that to happen. Again, trigger point, keep repeating this over and over so everyone understands. The trigger point or the completion of the top will take place on a close below 210. It has to be a close right there. So for you option traders especially, make sure you set your alerts on IWM to notify you when we're closing below 210. Now let's go to the Qs. QQQ, tech sector still being bought up. Again, people buying the dips. Gaps being left below the market right here. I think we'll see a little bit upside Monday and Tuesday. And then just like what we saw on IWM, I think we're going to pull back to fill that gap. It will most likely be right around that 20-period moving average right here. Ultimately, I think we're going to test support right around 350. That's based on a Fibonacci calculation on the pullback. So I'm leaving that in place until we hit that. And then once we bounce or break that support level, we'll reevaluate where the next support level is. Probably going to be somewhere down here around that gap fill point right around 320 for the Qs. Now, last week I did something different. I'm going to continue because I talked about a possible test of resistance on Ethereum right here, Grayscale Ethereum. More or less, the ETF for the crypto market. And we did test that resistance right here. Remember, none of these candles were here. None of them. We tested that resistance, gapped up here, pulled back this week on Thursday, filled that gap. And guess what? The oscillators are starting to go up. Now, I am not in an Ethereum position. I got out last week. I'm waiting a breakout over this high and this resistance point right here on higher volume. Just letting you know, I will be taking a new long position. Not in yet. I'm giving everyone the heads up. I don't like trading ahead of everyone when I'm talking, so I'm giving you that trigger point. I close over this high right here on higher volume is another opportunity to make money on a target price up here around 36, 36 and a half. So that could be a nice percentage move for those of you that are trading Ethereum and some of the other crypto markets. Again, I pointed out the fact that this looks very much like a cup here and a handle here, with this horizontal line being resistance, also known as the brim or the rim of the cup. A breakout there could lead to much higher prices, especially once we break out over this resistance gap fill target. That's it. Again, I will leave the link from last week's report so you can review that in the description box below. Have a great weekend and a great trading week to follow. So long.